You're looking at one of the biggest structural shifts happening in DeFi right now, a shift that could move institutional capital, real capital, not retail noise, directly into automated, transparent, on-chain systems. And at the center of this shift is a project about to launch its token sale on one of the most selective platforms in the industry. Today, you'll understand why Makina may become the execution layer powering the next era of professional cross-chain asset management. Welcome back to The Block Analyst. This episode breaks down Legion, one of the highest standard merit-driven token launch platforms, and its newest entrant, Makina, a programmable execution engine built for funds, asset managers, and institutions that want to operate fully on-chain with precision, risk controls, and transparent automation. All information in this episode is taken directly from official documentation, audits, and platform resources to maintain a high-accuracy breakdown. Disclaimer: this video is for educational purposes only and not financial advice. What is Legion? Legion is a merit-based crypto fundraising platform that blends traditional finance standards with fully on-chain transparency. It focuses on compliance, investor accountability, and curated token offerings under the MiCA regulatory framework. Projects launching on Legion can customize allocations, whitelists, discounts, and off-chain criteria to build a strong organic community. In simple terms, Legion brings professional-grade structure to public token sales while giving retail users access to high-quality early-stage crypto offerings they normally wouldn't reach. Introducing Makina. Makina is not a DEX, not a yield farm, and not just another execution layer. It's a programmable asset management engine built specifically for on-chain funds, professional managers, and institutions. The idea is to solve a long-standing problem in DeFi. There's no unified, safe, transparent way for professional asset managers to run complex multi-chain strategies directly on the blockchain. Makina aims to fill that gap. We shift directly to the Makina documentation. The documentation describes Makina as a programmable execution layer designed for funds and institutions that want to operate fully on-chain. It lets professionals deploy and automate strategies across different chains, all while maintaining strict risk controls and transparent on-chain verification. Makina's mission is to bring professional-grade asset management into the on-chain economy. Right now, asset management is mostly manual, fragmented, and dependent on multiple tools. Makina creates a unified environment where managers can execute, automate, and monitor everything from one system. Inside Makina, every strategy runs through something called a machine. A machine is a smart vault operated by an approved professional manager. Users deposit capital into the machine. The manager executes trades, hedges, yield strategies, or multi-chain operations on behalf of the depositors. Everything is transparent and permission controlled. Deposit and withdrawal logic is handled on Ethereum, where the machines are deployed. Makina uses a specialized execution engine called the Makina Virtual Machine. This engine standardizes strategies across any EVM chain. Whether the manager interacts with Ethereum, Base, Polygon, or another chain, the logic is consistent. The VM guarantees that every instruction, risk rule, and operation follows the exact constraints users approved. The execution is fully programmable while still being bound to strict policy rules. Makina runs on a hub-and-spoke model. The hub is Ethereum. This is where machines live, where users deposit, and where the core logic resides. The spokes are called calibers. Each caliber is a smart contract module deployed on another chain like Base or Polygon. These calibers allow Makina to execute trades, swaps, or position adjustments locally on those networks without exposing users to unnecessary cross-chain risks. Makina partitions strategy logic across chains without losing control. The machine on Ethereum issues instructions. The caliber on the target chain processes them. This keeps execution fast, local, and efficient while maintaining a unified risk model, unified accounting, and unified user experience. Managers can build both simple and complex strategies. They can rebalance positions, hedge exposure, rotate assets, or capture yield opportunities across different chains. They do not need separate tooling for each chain. Everything flows through the same VM. This reduces operational risk and execution overhead. Users can expect transparency, real-time data, clear instructions, and predefined strategy logic. Managers cannot operate outside the bounds of what has been authorized. Every action follows rules, nothing is hidden, nothing is improvised. The machine publishes state updates to Ethereum, allowing full on-chain verification. Makina creates standardization for a sector that has never had it. Clear risk limits, automated execution, multi-chain reach, unified management tools. No custodian, no trust me systems, everything is enforced by smart contract logic. Makina allows managers to unwind positions atomically if something goes wrong. If a strategy is exposed to sudden market risk, the machine can rapidly exit positions in one action. This prevents cascading failures. The system is designed to make execution predictable and safe under stress. Makina uses a layered security model. Strategies must include approved instructions. On-chain policies define exposure limits and operational boundaries. A separate security module absorbs unexpected tail risks. This adds protection without creating a centralized choke point. Every machine issues ERC20 tokens representing user ownership in the strategy. These tokens are fully transferable. Users can potentially supply them as collateral, trade them, or integrate them into other DeFi ecosystems. The system becomes composable and modular. Before launching to the public, Makina already operates machines managed by Dialectic, a professional on-chain fund. These machines include DUSD, DETH, and DBIT. Combined total value locked is around $94 million. This is significant traction for a protocol that has not yet held a public sale. Makina lays the groundwork for high-level automated asset management. It enables professional strategies that previously required complex off-chain systems. It brings full programmability to on-chain capital allocation. It creates a single execution environment across every supported chain. Institutions need predictable execution, risk transparency, auditability, and unified tooling. DeFi never provided a complete institution-ready stack. Makina attempts to close that gap. For institutions, the ability to run fully compliant, transparent, automated strategies on-chain is a massive unlock. Makina offers the architecture for that shift. Makina's architecture is designed to support AI-driven strategies. Agents could eventually deploy automated logic that interacts with markets in real time. The system's deterministic machine model makes that possible. The protocol is built to scale with demand, chains, and new execution environments. Bringing it back to the starting point, the reason Makina's launch on Legion matters is because Legion focuses on high-quality projects with real infrastructure and real adoption. Makina fits that criteria. It is not a speculative idea. It is a functioning, capital-heavy protocol preparing for broader distribution. Makina aims to become the programmable asset management backbone for the on-chain economy. Unified execution, institution-level risk controls, multi-chain reach, transparent logic, pre-launch traction. This is the type of launch that shifts narrative cycles because it taps directly into the market's biggest unmet demand. Structured, transparent, automated capital management built for professionals. If you found this breakdown valuable and want more long-form investigations into the future of digital finance, subscribe to the channel and stay tuned for upcoming episodes. Disclaimer: this video is for educational purposes only and should not be considered financial advice.